This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. There were 1,839 auctions over the past week, returning a clearance rate of 58.9%. In Sydney, there were 745 auctions with a clearance rate of 57.7%. Melbourne held 668 auctions with a clearance rate of 64.7%. Brisbane held 78 auctions with a clearance rate of 62.8%. Adelaide hosted 56 auctions with a very high clearance rate of 75%. And the ACT held 70 auctions with a clearance rate of 61.4%. Well, joining me now on set is Angus Moore from REA Group. Angus, thanks for your time. Looks like clearance rates are holding up pretty well.
Yeah, fairly solid weekend overall, and I think that's really been the theme so far this spring. We've seen pretty solid clearance rates kind of throughout the last month and a half or so, and really even going in, back as far as late winter, we saw pretty solid conditions. And that's despite an increase in volumes that we've seen, as we head into spring, as a lot more properties come to market. We've kind of seen clearance rates hold up even despite that extra supply. So pretty broadly strong conditions. And that's consistent with what we're seeing in other metrics. The time it takes to sell a home, it's been pretty stable over the past 6 months.
Yeah, how long is stock on the market right now?
It's typically around about a month and a half at the moment, which is a lot longer than we were seeing, say, 18 months ago when property markets were very, very hot, late spring 2021 into the start of 2022. But it had been getting longer throughout sort of the 12 months ago through 6 months ago, and then things have been a bit more stable. So I think we're seeing a bit of a stabilisation in conditions.
Yeah, look, last week the RBA upwardly revised its inflation forecast. On Friday, the Statement of Monetary Policy economists see next month's meeting as live. Do you think that you see it that way as well? Is it live next month?
Yeah, it's a good question. I think certainly the possibility of an interest rate increase is live. Whether it's December or February, I'd probably lean to February. I think we'll probably see a bit of respite for the end of the year. And then once we get more inflation data in early 2024, which will give a bit of a read on what's happened so far, I think that's where the RBA will make a bit of a decision. But, I think the changes that we saw to their forecasts on Friday do make the possibility of another interest rate increase pretty solid. I wouldn't be surprised if we see one. Both inflation is higher, as you say. It's going to take longer to get back to the band. And also importantly, we also saw unemployment get revised down. They're expecting that unemployment's going to stay lower for longer. So kind of a broadly stronger outlook.
The thing is, though, we've seen the Reserve Bank lifting rates aggressively. Property prices have kept increasing virtually month on month. So is there going to be any dampener on the property market if the RBA potentially lifts rates again?
Yeah, I think there will be. It will be a headwind to property prices. We know interest rates are incredibly important for property prices, but they have been remarkably resilient, as you say. We did see a real impact last year when the RBA was raising interest rates, back to back, 50 basis points every month. Prices were actually falling and falling quite quickly in some markets like Sydney. This year, though, that's really turned around. Prices are now fully recovered in Sydney. Nationally, we're back above where they were before the RBA started raising rates. Melbourne's a little bit softer. Brisbane's a little bit stronger. Places like Adelaide and Perth kind of just kept on trucking without any heed to what was going on in interest rates. So, I think we'll see a bit of a slowdown in price growth if interest rates do go higher, But how much of an impact will depend on how much further they have to go.
Now, we know lots of Aussies have refinanced their loans over the past few years, but are we starting to see signs of that slowing down?
Yeah, it looks like we might be, though, slowing down from incredibly fast pace. So it's still at a very high level at the moment, but maybe not what we were seeing kind of in the middle of the year. And the reason for that, there's probably a few reasons why we're seeing strong refinancing activity, but a big part of it is the fact that a lot of people have been rolling off fixed rate loans. That acts as a bit of a trigger to go and refinance. And we are through the peak of that now. June was when we were seeing kind of the most expiries of those pandemic era fixed rate loans. We're still seeing quite a lot of people rolling off at the moment. We will for the next few months, but it will start to slow down into next year. Next year we'll see kind of half as many people rolling off as what we were seeing at peak earlier this year.
And then demand for credit, I guess it's still pretty strong, really.
We're seeing remarkably strong demand for credit, which is kind of consistent with what we're seeing in housing market more broadly. The fact that prices are growing, we are seeing reasonable volumes in the weekend's auctions. That all points to pretty solid activity and demand for credit, and we're seeing that in the data.
Angus Moore from REA Group, thanks for coming on the show.
Pleasure. Thanks for having me, Ed.